Hello friends, and welcome to another class of CA Guru. The topic for today is going to be assessment procedures under the Income Tax Act 1961. Now we all know that once you file your return of income, then what happens? We know that the return is scrutinized by the tax office to see that whatever positions are taken by the assessee are correct or not. So if you were to see the process that your return goes through, you prepare your return of income. So preparation is the first step. Now preparation you must have learned in your CA Inter as to how you prepare a return of income. You have 5 heads of income, you deduct your deductions, then you compute your taxes on your income. Once all this is done, your return is prepared and then you file it with the tax office. Now what happens after this filing of return of income? Now what happens is there's a procedure by which the income tax office, what happens? The income tax office is supposed to examine based on certain internal guidelines and criteria that they have whether or not the return filed is correct or not. So the IT office checks the correctness of the return. If the return is correct, they would send you a notice or an intimation saying everything is okay. However, if the return is not correct, they can increase your taxable income. Normally they would not decrease it. They would increase your taxable income. Now if you agree, you pay your taxes. If you do not agree, you go for appeal. Appeal is a mechanism by which the assessee says that whatever the tax office is saying, I don't agree with that, and let us go to a third person who is senior in rank to the assessing officer and get his blessings on what is the correct position according to the law. All these things we are going to see in subsequent slides, but this was just to give you an idea as to what happens once you file your return of income. So what happens when you file your return of income is the tax office sees the correctness. If they are satisfied that the return is correct, it's okay. If they are not satisfied, then basically what happens is they make adjustments, they increase your income. If you agree, you go ahead and pay your taxes. If you're not, then you have to go for appeals. So this was basically the procedure which takes place under the Income Tax Act. Now let us move forward and see how all this takes place.